Good morning, folks, and welcome to this morning's video. So this morning I have two pairs on watch, and those are dollar CAD and euro dollar. I didn't make a video yesterday because I had things to attend to and I was running a little bit late, so couldn't make a video then. But I am back today with another video, and let's break down these pairs. So dollar CAD and euro dollar. So dollar CAD is my favorite of the bunch today. So you can see on the higher time frames that we are at an area of value. You can see that this area of value stands out even on the weekly chart. Okay, sticks out like a sore thumb. So a lot of people would be paying attention to it. Okay, you can see that we've just broken above. We've just pierced above ever so slightly. I wouldn't be surprised if we push a bit higher, or if we are going to move to the downside, because this is a standout area of value where I would anticipate people getting themselves caught the wrong side of the market. But because we have tapped into that area now, and technically we've broken above, we could be looking for shorts today for a move potentially which comes all the way down to here. Because if you look at this low here, this is a low which we wicked to and not through, as I've literally just said. If we're going to break above, if we're going to move to the downside, we usually break above standout highs before moving to the downside, and the same is true on the flip side. So because we've only wicked to this area here and not tapped into it by way of full-bodied price action and not broken below it, then it's likely that we would have to break below, or at least fill that wick with full-bodied price action before moving to the upside to potentially take out this high, okay, which this high near missed too. So that's the thinking at the moment. We have a wick 2 on the weekly chart, giving price a reason to come back down. It's also a wick on the daily chart and on the 4-hour chart. Okay, on none of these time frames did we get there by way of full-bodied price action, even on the 1 hour to some extent. Okay, so that increases the likelihood of us taking out that low. On euro dollar, I'm actually looking to get short, and you might be thinking to yourself, well, hold on a minute. If you're looking to get short on euro dollar, surely that implies dollar strength, which would mean dollar CAD was going long. Well, there may be a long opportunity for dollar CAD, and you'd be right to think that about the dollar. Then the question I ask myself is, where does the buy idea on dollar CAD, if dollar CAD is going to go long and follow the dollar strength, where does that become invalidated? And I'll touch on that in a second. Okay, so we've broken above here. We have the near miss to that area, suggesting this was, or adding weight to the fact that this is an area of value when we come up and we near miss to it. Okay, we then have we have the sellers trapped in too early here. As you can see, they get washed out. Price taps into the area, breaks above. Well, there's a potential buy idea, which I will not be looking at today because this is a daily forecast. But if we got something, if we really analyze this in detail, if we just go down to the 15-minute chart ever so quickly, we have a near miss to this low here. There was a bit of a sharp move, okay, a bit of a sharp move there, and then we came down a near miss to it, okay. And also this low happens to be the retest, or the potential retest, of the back end of that high there, okay. So when that happens, often the near miss can give us something like this, right? Where we get something like that. The near miss can often be the first touch of a 3-touch structural approach, okay, where we to an area of value. So it's possible that could be the first touch of a 1, 2, 3, which taps into that sharp move there, which happens to be the retest of the back end of that. We then tap into that, retest the back end of that. We then get this 3-touch structure there, and then we end up getting long. And I would be open to that possibility. But if you just look at the time at the bottom of the screen, that wouldn't be ready until about Thursday, okay? But that would be something that I would consider. So where does that buy idea become invalidated, that potential long? What would warrant that being a failed buy structure, as it were? Okay, well, what would warrant that being a failed buy structure? Okay, where's my forecast? Probably need to go. Okay, the internet's gone down. It's been doing that a little bit this morning. Let's see if it comes back. No, it doesn't look like it's coming back. Right, there we go. So we're back in the room. So where that buy idea would become invalidated is if we break below here, because if we break below this area of interest as I've got it marked, and price does not, for example, do this, if we break below that and we don't immediately pop back up like that, then that suggests that there was not enough liquidity here and not enough liquidity at this retest to send price to the upside for anything like a buy structure to form, okay, if we consolidate underneath. So if we impulsively break below this area of interest, that suggests that we've tapped out enough liquidity here to send price to the downside, and then the consolidation underneath would be the confirmation that we didn't find enough liquidity here for price to do that, and then some kind of buy structure to form like that, okay? And when we're kind of retesting the back end of what could potentially be a buy structure, I always look for a 15-minute continuation. A 15-minute continuation, so 6 to 8 corrective 15-minute candles, just for a little bit more deliberacy rather than just a 5-minute continuation, which could just be a very temporary stall in price before we get that come back down and then move up. Okay, so that's what I'm going to be looking for, and I would look for an entry on the break or within the structure. And then literally just as a first inflection point, we would have something in the region of 2% to work with down to that move there. Okay, I don't think that holds much weight personally. If we look at, so we have this kind of structure here. Okay, the base of this structure, which happens to be the retest of the back end of that wick, would be there. So we'd have something in the region of nearly 3% to work with till we got to that area. And then the area that I'm interested in, just for where I think not necessarily that price would stop, but where I think we may get some profit taking, is there, because if you look, we have consolidation here. We have a near miss to that area, suggesting that that is of some value. Okay, and that also happens to be that low, the retest of the back end of all of this structure. Okay, so that is where I would anticipate some profit taking of some description. Okay, and also down to the area, I would have, one of the reasons I've put that as my target is because when I was sizing this up, okay, down to the area, we would have 7%. Okay, and that is where basically where this consolidation started. And if price can pull back 50% of the move in such areas, then that would, if we just use the Fibonacci tool and measure from the whole range, 50% would be all the way back up here, right? So if price was to pull back 50% of that move, the entire move, okay, that would mean that I would have to sit through, and it often does that at the 90% area. Okay, I would have to sit through a pullback of over 4% by the looks of it, looking at that, and then it might not continue anyway. So potentially you've given back like 4%, and my threshold, I never leave more than 3% profit on the table. That is my rules. So what I would do in this instance is I would measure from the range, so the range that we've just broken above, down to this 90% area, and then I would set a take profit there while simultaneously trailing my stop loss, and then I would have something in the region of 6% to work with. So hopefully the thought process is nice and clear on that one. So let's put that dude back in his box. And so I've got an alert set just above the area of interest. And of course, if we don't tag that, then neither the buy nor the sell setup can be anywhere near ready. Okay, so I don't need to check it. So that is dollar CAD, and that is the thought process surrounding that pair. If we let's just put that back to where I had it, which was there, I believe. Was it there? Yeah, I think so. Right, let's move on to euro dollar. So euro dollar, if we just zoom in, so this is the sell idea that I'm looking at. You can see we've tapped into an area of value. What did we do? We trapped this. You can see here we kind of wicked to it. We did wick slightly through it, but as I've said previously, when we have a a significant area like that, which stands out on the weekly, it's usually the case it will break above if we're going to move to the downside. And you can see that that's what's happened. We have potentially the start. Of course, this isn't closed, this weekly candle. We potentially have the start of an evening star formation there. Okay, an unconfirmed one at the minute. You can see here we completely retraced all of the body of the previous candle. And what I like about this, it seems logical to me that the sellers that are involved in this wouldn't be getting out of their positions possibly until all the way down there or there. Is there any markers? Certainly there as a first target, okay? Okay, we've got some consolidation there where there may be some profit taken if we're going to continue moving to the downside. So we dropped out by way of full-bodied price action. Nice solid daily close yesterday. Bit of a wick underneath it, so I'm not surprised that we're consolidating. When we see these candles with a bit of a wick below them, usually we get some consolidation, even if we are going to move to the downside. If we just look at this, we have another clue, a reversal structure. 1, 2, 3, middle section. Okay, so we see the 3 drives, 1, 2, 3. We then have confirmation of the move to the downside by way of an impulse correction continuation. And what have we done? Okay, so I wouldn't have been looking for trades just above here because there was a near miss to this low. So potentially we could have gone like that, consolidated, and then moved to the upside. But what's happened at this moment in time? We've consolidated below the low of this structure, okay, suggesting that price did not find enough liquidity at this low to send it to the upside, and that this is just a further impulse correction continuation to push lower. Okay, so with all of that in mind, what I'll be looking for today is I'm looking for, okay, this far down into the move. So how many corrections are we? You could include that as a correction, but we've got 1, 2. This is the third correction into the move. So when we're the third correction into the move or more, I never look for an entry on the break. That's my rules. And as I've stated previously, that's literally just because structures like this. So if we were to get what I'd be looking for today, something like that, these can turn into slightly larger versions of themselves. Okay, something like that maybe. And if you were to look to get short on the break, so let's say we got short on the break of this, we wouldn't be able to manage it down to that low. Whereas if you look for the risk entry within the structure and price does something like that, you've got something in the region of 2% to work with, which means you can get your risk off the table and get your stop loss to break even. Okay, so that's the logic behind the risk entry within the structure when we're the third correction in or more, if that makes sense. Okay, so I like the fact that we're consolidating back below this low. I wouldn't be surprised if this ends up being a retest, so we get something like that. We may come down, we may tap into the first high, but come down, fall correctively, and the corrective move down would imply that this is people trying to sell it, whilst the orders that are still above price are dragging price up. Well, if the orders that are above price are dragging price up, where are they? They're likely sat here or just above, because this is the retest area. Okay, and then we would likely see the move to the downside like that. So what I'm looking for here is a 1 hour consolidation, a 3-touch 1 hour consolidation, where we've got the 1 hour consolidation now because we have more than 6 to 8 corrective 1 hour candles. And all I'm looking for now is the 3-touch continuation or the 2-touch continuation with the 3-touch structural approach. And I'll have an alert set just below this high to see if we come up to that area. Okay, because that's what the minimum that we would need to tap into for me to be able to place a trade on this. And then I would have, in this instance, once again, I'd be looking because of price, leaving too much profit on the table. Okay, yes, we could be coming all the way back down to these lows, but if we just look at this, we have this. So we have this running channel here, okay, and the base of this structure was here, which just so happens to be the retest at the back end of this, where it retested the back end of a lot of volume. Okay, so that would be where I would anticipate some profit taking. And does that area make contextual sense? Well, it does, because if we just measure, I've got 5 minutes left, so I can go through this in a bit more detail, which I like. Okay, so we have this move here. Okay, I'm measuring the impulse correction continuation. Have we fulfilled that move? So the impulse started there. We measure it from the break. That takes us down to this area. We've not fulfilled that. Okay, so that makes sense why we would keep going. If we just measure this, so this impulse here, and measure it from the break, assuming that that is actually where the base would be of this structure, and we assume that the continuation leg out is of a similar length, that would take us down to there. And if we measure that from the break, that also takes us down to the area as well. So that makes contextual sense that in that area, even if price was to keep going, it would likely, because it would have fulfilled that 1, 2, 3 and that 1, 2, 3, it would likely need to build volume in this area to be able to keep moving to the downside. So therefore that means that's a logical place where for me to take profit while that consolidation and to let that consolidation build. And then of course, if we got consolidations underneath here, under here, some kind of larger structure, then I will be looking for a potential further continuation to take out this low here. Okay, so that's the logic. That's what I'm going to be looking for. I hope you've enjoyed this video, folks. And of course, once again, I would be measuring, in this instance, measuring from the range. So from there to there, and that would give us something in the region of 6% to work with. And I would trail my stop loss accordingly. Of course, if we pull back 50% of all of this move, then of course we could be moving I'd be leaving potentially about 5% on the table for no logical reason other than greed. And I don't trade through greed, I trade through logic. Okay, so I hope you've enjoyed this video, folks. And if you're new to Falcon, which is one of the places that this will be posted within the Falcon community, I hope this has helped explain perhaps anything that you were a little bit confused about. I've been doing this for trading for 5 years now. I've been trading this strategy for 4 years, and I'm still learning, but I've learned enough to, I think, to be able to help a lot of people, certainly the ones that are newer in their journey. And if you're not a Falcon member, excuse me, I've got an air bubble. If you're not a Falcon member, then I hope this has challenged your perspective a bit. And if you would like to learn more about Falcon, then there are links. If you're watching this on YouTube, if you're watching this on TradingView or YouTube, then just to say there is a link on my YouTube channel in the description of this video and all of my other trading tutorial videos where you can learn more about the community. Full disclaimer, I am an ambassador to the with regards to the sign up link, so I do make a 30% cut of any sign ups, but I'm not doing it for this. I'm primarily make these videos to help members of our community, but then I thought to myself, if I'm doing that every day anyway, then why don't I also just well, they're on TradingView anyway, why don't I just make them public and inform people that they can sign up to Falcon if they wish on my TradingView profile, and then why don't I just put this on my YouTube channel as well as an extra way to help people, and if they want, join the community. But these videos also help me as well because they help keep me accountable. The chances of you taking shit trades is much less when you have to explain your analysis to other people. Okay, so that's another thing that perhaps people that have a cynical view of people who put videos out like this, that's another point that maybe these people should consider, that it's also an accountability aspect, that when I have to make trading videos, it's very difficult for me to take shit trades because I've got to explain it. It's the same as if you float your company on the stock market, for example, you have to explain your decision making within the business world to your shareholders, okay? Which is, for some people that are a bit reckless in business, that have done well, that maybe have reckless tendencies, maybe that's a good way to hold themselves accountable, because then they can't do too many reckless things. Otherwise the shareholders pull all of their money out of the company. Okay, but that's just an analogy I like to use sometimes. But anyway, I hope you've enjoyed this video, folks. Have a great rest of your day, and I'll see you again in the next video, which will likely be made tomorrow morning. Adios, amigos.